Next one up here, buying more Nvidia,
which I thought was pretty interesting, considering the stock has been up a lot. It's right on the heels here of Apple with market cap. Why'd you buy more here?
Yeah, so next week, we know, which we're going to get into, we have the Oscars of earnings with all of the big names that we talk about. And I think that, how do you play that trade? I own Nvidia, I've owned it for a long time, and I think the stock technically looks like it's breaking out. It had been consolidating for the past couple months, but I feel really confident Microsoft, Apple, via OpenAI, Meta, Google, Amazon are all going to be talking about what? Their AI initiatives. And so I think next week we'll have some winners and losers, some disappointments, but I think all roads once again lead to Nvidia, and you're going to continue to see huge CapEx spends from these companies as they're all individually looking to monetize their own endeavors into AI. And I still think Nvidia is in pole position to benefit from all of that CapEx spend. So I took the opportunity to add to it yesterday.
Yeah, it's in the midst of pretty good momentum. It's up 18% month to date. It's been up 28% in some 3 months. As I said, it's barely off of its record high. The others have a little bit more to go. So unafraid, I find, Bryn, to even after that kind of momentum to buy it here rather than wait for a pullback, which hasn't been out of the question for this stock over a period of time.
Yeah, well, I mean, the way I've been playing the stock is, I have sold calls against it. So when the stock sold down, I closed those call positions. So just owning the stock. And so I'm like taking advantage of the volatility. And I think that's a good thing to do with a lot of these names like an Nvidia or a Tesla. But I just still see when I'm looking at Apple or Microsoft's, earnings and revenue growth really aren't that strong. Is part of that because of all of the CapEx, especially Microsoft is going to be doing. And I just think Nvidia is going to be the recipient. We won't get their numbers till the end of the month. And so I just think it's a good opportunity where next week is going to be a buy Nvidia. And I think that's going to be a consistent story from all of these companies who are spending billions of dollars on Blackwell, on H100s, H200s.
Yeah, when she says end of the month, it's next month. So keep that in mind. NVIDIA's always reports like a month, if not a month plus after a big tech report. So what's my opinion on NVIDIA? The same as my opinion's been for the last 12 months now at this point in time. Stock goes 150, 200 into year end. And then I think it flounders for quite some time after that. And I think it'll just be in that 150 to 200 range for potentially a year or several years after that, right? I wouldn't bank on that stock crashing anytime soon. If you think like Nvidia is going to just go to 200 and then crash, I think you're misguided. 2025 numbers are going to be great for Nvidia, right? A lot of that's going to already be priced in, which is this last kind of move to 150, 200. And then what's going to happen is, essentially there'll be some worries about 2026 back half numbers, but that won't come anytime soon. That's still a year plus away. So the moral of the story is Nvidia runs 150, 200, then it flounders for quite some time, right? And then it starts to look really attractively priced. And then after that, they'll probably have a downward cycle for a while there, which will be not fun to go through in regards to that. But for the short term, Nvidia looks great. Just bottom line in regards to that. But, so anyways, that's my same opinion I've had for at least 6 or 12 months now at this point in time. And honestly, it looks like it's going to be right on. Look at the stock today, 143. Big tech earnings are going to come out. They're probably going to be great. That's going to give a lot of people confidence in regards to CapEx spend in 25. Nvidia is going to probably come out, blow out their quarter. Boom. And the stock's 150, 200 in that range, right?
Josh, it's a top 2 position, I think, for you. We're going to have to wait until November 20th for earnings, so we got a minute to wait there. What's your read here? What's your take on Bryn buying more up here?
Well, I always root for Bryn, but I would just say we know AI spending has been and should continue to be explosive. The question is, how much is already baked into the expectations for the stock? You're talking about a company that out of the last 5 years has had a triple-digit return, stock return, in 4 of those 5 years. You're basically talking about a company that over the last year has grown its earnings per share by 415%. It's grown its sales by 195%. And investors have gotten accustomed to that kind of eye-bulging, eye-popping growth. And it's just hard for me to understand where that's going to come from. We already have the expectations based on all of the other Mag 7 names and the hyperscalers that are going to be doing this sort of investing. We know that. We also know that there's been a global push for companies to experiment with AI, incorporate AI, et cetera. So who's left? Is Jupiter and Mars going to start contributing here to the forward guidance? So that's the risk. I don't necessarily think that it has to be feast or famine. There's a universe in which Nvidia reports great numbers. The stock doesn't rally, but doesn't get killed either. It's just a massive company with already embedded huge expectations, and the gains of the past are unlikely to be repeated from here. Doesn't mean there's not another 10% or another 15%. I just think it gets harder from these levels. And I'm saying this as a long. So I'm in the name.
I mean, JB and myself, we basically see eye to eye in regards to this. What you're going to see play out here is, a very nice increase in CapEx spend from the Metas and Microsofts, all those companies in 2025, which is going to help Nvidia put up another, 25 to 35% revenue growth year, right? But 26 is that year where I think we start to see a lot of moderation in terms of the AI chip spend, where these companies might up budgets 5, 10%. And then at that point in time, and I think there's a high probability of that. And that's going to be the moment everybody says, oh boy, that big upping in CapEx spend is not coming anymore. And there's no other big, massive companies to really count on the new guy, buying NVIDIA's chips. All the companies you want to be buying NVIDIA's chips are already buying them as fast as they can possibly get their hands on it. And they're going to buy even more in 2025. But we're going to see a major slowdown in 2026. And so that's why NVIDIA, at the end of the day, I look at NVIDIA and I think it's going to be a stock that likely flounders 150, 200-ish range for years. And that's why I'm not interested in that. It's a great company. They're going to be putting up great numbers over the next few years. But I just don't want to be in a company where I feel like the stock price is going to flounder for years. It's going to be several years of floundering, in my personal opinion. So, that just is what it is. I don't know, what else to say about it. And so that's why I decided to take my huge profits and, move the money elsewhere. Is there another 10, 15, 20% you can make in the stock? Yeah. I think it's going 150, 200, as I said, for 12 months now, right? But after that, I think you're going to flounder for a long, long time. It's going to be kind of like a Tesla situation, but without maybe the crazy crash, because Tesla had that crazy crash, right, where the stock went from 400 to 100. I'm not convinced we're going to have that in regards to Nvidia. I think it's just more of a floundering situation.
In the name, that's why I went to you next. Weiss, you're in the name. Yep. Is there more near-term risk in this name now, given the run that it's had, as I said, the timing of Bryn buying it here? Just give me the way that you would observe, doing this now.
Well, just mathematically, when you're coming up to an event that's catalyst for the upside and the downside, given the performance you cited, there is more risk. But that's short-term risk. And Bryn buying it now, I'm sure that regardless of what happens this quarter, if you look out a few months, she's going to be happy she did. So it's always difficult to pick the timing on buying a name or adding to it, and she's adding to it. I've been there for a long time. So clearly right now they are in the sweet spot. And clearly they can't meet the demand that they're seeing from customers and want to be customers. So it's a great thing to do. And as I mentioned, I think a few weeks ago, the fact that Jensen Huang has been so visible and talking about demand, he's got to deliver. And him not be anything but a foolish person, I believe he knows it's going to be a great quarter. Now, what the whisper numbers get to be when numbers move like this, who knows, but who cares?
Bryn
That's a moment in time.
Makes the point, too, that, the factor of momentum is a very, very powerful, it's a very powerful thing.
But I'd also say that Taiwan Semi is the perhaps the most direct beneficiary of the strength in NVIDIA. And they announced on their Phoenix fab, right, that yields are 4% better than their Taiwan fab. So that is powerful. That stock's had a good move, but I still think it's going to have a great move. Over the 4-year time period, if you look out from 23 to 26 forward earnings, they'll have double revenues, right? They'll have doubled earnings. I mean, that's tremendous performance. Not quite NVIDIA-like, but I also think it's much more sustainable.
Yeah, I don't like Taiwan Semi. It reminds me a lot of Micron stock, MU. Micron's a memory chip company. There's only a few real big memory chip players out there in the marketplace, right? And they're one of the giants. But I just don't like those companies that you're counting on the market to be great in order to really put up big numbers. I like companies that can really control their own fate a lot more. Nvidia can control their own fate. They can come out with new game-changing chips, as we've seen, right? They've completely changed the trajectory of that company by obviously what they did with the H100 and then kind of going on from there, right? And it's gotten them to many trillions of dollars of market cap, and it's probably going to, before it's all said and done, get it to, let's say $4.5–5 trillion here in the short term, right? And Nvidia, by the way, long term could still be a $10 trillion company. Keep that in mind. But that's way out, okay? So Taiwan Semi, they're counting on, more semiconductors being made and those sorts of things, and they're going to do that. It's just I don't love to feel like I gotta bank on what the market's going to do. That's just never fun. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6- and 7-figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Alrighty, guys, let's go ahead and react to these two videos here.
Positioning ahead of those market-moving events. Well, let's ask Tony Pescarello. He's the global head of hedge fund coverage at Goldman Sachs. He is back with us again. It's good to see you.
Thank you, Scott.
I mean, what should we be thinking about the market? How are you feeling about it right now?
I think the big dynamics in the game are pretty favorable for risk. Let's start with growth. We think Q3 GDP this week will print 3%.
Okay.
Alongside that, we've got earnings growth plus 8% this year, and as the market looks forward, plus 11% next year. And then the Fed. We think they cut 200 basis points through the cycle. We've got 50 in our pocket, obviously, and another 150 from here until next June. Interplay between the Fed and the economy is in a remarkably friendly place for the stock market. Okay, I think that's probably pretty well known to the market. S&P is looking to be up 11 of the past 12 months. And so where I keep coming out is it's a bull market. The primary trend is higher. The setup's pretty demanding, and so I don't love risk reward. We've got a lot of wood to chop in the next 2 weeks. And so my guess is it's a trader's market with an overarching bias, which is positive.
Are you talking about the wood to chop being tactically over the next 2 weeks is difficult, but get past that? And
so I disagree with him in the respect of thinking about the market in terms of a trader's market. I think it's been an investor's market. I really do. Like, if I just think about where the market's been, the ones that have really been, paying off in regards to the situation are really the investor folks, the ones that are really doing the research work, right? And really studying these companies and studying where the biggest opportunities are, because there's a lot of stocks. I know the S&P 500 looks like it's so great, but I can tell you there's so many stocks underperforming the market significantly. I'm talking significantly. And there's other stocks that are doing tremendous that are at 52-week highs, multi-year highs, all-time highs, right? And so I don't really look at it as a trader's market. I look at it as an investor's market. I think about a trader's market more as a stock market that's going nowhere, right? And it seems hard to get any sustained rallies in stocks. That's what I think about when I think about a trader's market. So, you've got a kangaroo market. It's not really going anywhere. And every time you get a 10, 15, 20% bounce in a stock, it sells right back off. That's a trader's market to me. This is an investor's market, because a lot of these stocks that do make a big sustained move, it stays there. Palantir is a perfect example. Palantir makes an excessive move, right? To what is Palantir today? $44 or something insane, right? And you would think, oh, maybe Palantir is going to give back those gains. No, it hasn't given back those gains, right? It's held those gains strong, like Donkey Kong. And so that to me is an investor's market, not a trader's market.
We go towards what
PayPal, another one. That one moved from the 50s up now to the 80s. And if this was a trader's market, it would have given it all back, right? It wouldn't even have reached the 80s. It would have went probably 65, 70, right back down to the 50s.
Said the bigger themes are stronger growth. Fed's still going to cut, maybe not as much or as big as we once thought, but it's still a bull market despite what could be a messy next couple of weeks.
I think that's right. The sequence being mega cap tech, payrolls, of course the election, and then the Fed. I think if you get through that sequence, which is a lot of stimuli.
It's a lot of sequence.
It's a lot.
It's a lot.
But on the other side of that, presuming on net, that's a non-traumatic series of events. I think what you're going to be looking at is a market which has 2 months left on the board. The seasonals turn very favorable. I think there's probably a lot of buybacks to be done in the last 2 months of the year. November is the single best month of the entire year for stock buybacks. That is the single biggest technical in the market. We know the seasonal story, which tends to be very favorable at the end of the year, in addition to election dynamics.
That's a good point you brought out there about buybacks.
Which has 2 months left on the board. The seasonals turn very favorable.
That is true.
I think there's probably a lot of buybacks to be done in the last 2 months of the year.
True.
November is the single best month of the entire year for stock buybacks. That is the single biggest technical in the market. We know the seasonal story, which tends to be very favorable at the end of the year, in addition to election dynamics. And so it sets up well, again, knowing we have to clear a series of hurdles from here to there.
So
and I got another point to make. Very important point here into year end. Listen, the top of the market where a lot of people are invested, those stocks are tremendous. And so you're not very incentivized to sell those stocks in November, December. You're not very incentivized. What are you going to do? Sell those stocks, take a massive gain, and then pay crazy taxes on that in a few months? I don't know. Why not wait till the first quarter, right? Why not wait until, if you're on the assumption that this year is going to play out like a lot of years, November, December should be bangers. Markets should melt up, right? And then go ahead, take your profit in late winter, early spring, something like that, and worry about your taxes in 2026. So that's another thing to think about, right? Now, when the top of the market's weak, you can actually get a lot of tax loss harvesting. You get like extra selling pressure in the fourth quarter. We witnessed that in 2022, for instance. 2022, people were sitting on massive losses in Amazon, Meta, Apple, Microsoft, Nvidia, all those tech stocks, right? Tesla, go through the whole list of them. And they faced big selling pressure in the fourth quarter of the year in 2022, right? Even though the stocks were just trading at ridiculous valuations. And it's like, what? You're selling Meta under 100? You're selling Nvidia at this ridiculous price, right? You're selling, all these stocks at just insane prices. AMD was what, $55 or something like that? Like people were just selling at ridiculous prices. But a lot of people looked at it as tax loss harvesting. Like I gotta take my L's on these, right? And then if I want to buy them back in the first quarter of 2023, I can. And there was actually a lot of buying pressure into a lot of those same stocks that got wrecked in that fourth quarter. A lot of those same stocks saw significant buying pressure in early 2023, right? Even though those companies' earnings were actually very bad in first quarter of 2023. Look at Nvidia, Meta, all those companies. Look at what their earnings were first quarter of 2023. It was bad. They were all like trash pretty much across the board, right? And yet those stocks were already beasting because people were going ahead, putting money back in, and then those companies' earnings did start to turn around in the second half of 2023, right? And then obviously 2024 has been a phenomenal year for those companies' earnings. And the first half of 2025 is going to be a phenomenal year for these companies' earnings, maybe even into the second half of 2025 as well. And then we'll figure out the story as far as 2026 goes down the road here. But yeah, that is something to kind of keep in mind, that the whole tax play.
Words traumatic, not specifically referenced to the election itself or the post-election period. But if that period proves to be more traumatic than maybe some are expecting, would you be a buyer of the dip if it happened in the stock market?
I think there's actually a little bit of risk premium in the price already. And so take a look at the VIX, for example. All year long, S&P 500 has made higher all-time highs. If you look at the 35-year history of the VIX, when S&P makes an all-time high, the average level is 15, not even. We sit here today, it's between 19 and 20. Now, we don't know how much of that is risk premium for the election versus earnings versus payrolls versus the Fed. I mean, again, that's all kind of on the to-do list. But I think that alone, once we get over the hurdle, that decompression of risk premium, I think would stabilize the market.
Okay. The backup in yields. I get the feeling, based on what you've already said, you think it's just a product of stronger than expected growth, not something else to be overly concerned about?
Hard to disassociate exactly what the drivers have been. I think to my eye, it has started with a better than expected run of economic data, which leads to the second point, which is the market's pulled back a little bit some of the expectation for what the Fed will be doing between now and the middle of next year. You've also had some technicals. And then again, I think you also have a market which is telling you the bias of the election is one of reflation. And so that to this point in the game, I think has been fine. It clearly hasn't stood in the way of parts of the market I like the most, like financials and tech. Our rule of thumb is, if you ask the question, when does basically the bond market impinge on the stock market? Mm-hmm. It's a 2 standard deviation move in 10-year note yields that is 60 basis points in today's terms. We're about there. And so I do think the further you go in yields, particularly if it comes from a less friendly place, that could impinge on the stock market a little bit.
Okay, you sure said financials and tech, your 2 favorite places. Let's take them with the latter first, tech, because we're going to have the mega cap earnings this week, which you have really favored throughout the duration of the year, throughout the last really 2 years of this bull market. Is there any reason to change the bias now towards mega caps?
Still like them. The setup today, the starting point today, is not what it was 1 year ago when we made that local low, or 2 years ago when we made the big low in October of 2022, right? That's just the law of large numbers. That's the market cap appreciation we've seen since then. I'm still drawn to the earnings power. I'm still drawn to the return of capital. I'm still drawn to the reinvestment of capital. And again, we're going to learn a lot about these buyback numbers and these CapEx numbers this week. I think if I squint, Scott, I can tell myself a story that the setup for Q3 earnings is actually a little bit easier than it was for Q1 earnings and Q2 earnings. I say that with respect to earnings expectation and also positioning. So Goldman Sachs clients, as measured by our prime brokerage data, were sellers of tech stocks in June, July, August, and September. So I actually think, even though NASDAQ's up 7 weeks in a row, thankfully, I actually think there's some room here for these stocks to trade well on good prints.
Yes, 100%.